Hello, this is Natalie Carney in New York reporting for World Risk and Insurance News. In this edition, we have a report on the reinsurance renewal meetings in Baden-Baden. We'll have a report from the Hawaii Captive Insurance Council meeting in Maui. And in another installment of Best Day on RIN TV, we look at the use of social media in crime investigations, the inland marine market, and insurer reliance on risk models. This and more from the Video News Network for the global insurance community. You are watching World Risk and Insurance News.
From our news bureaus around the globe, this is World Risk and Insurance News.
We begin our report with a look at reinsurance renewals. With unprecedented losses in 2011, many believed reinsurance rates would increase. In fact, a recent poll by RIN TV revealed that 35% of respondents thought prices would rise, but only slightly. 26% thought prices would rise substantially. 16% saw prices falling, while only 13% believed prices would stay about the same. For an in-depth look at reinsurance renewal discussions, Nina Maria Potts sat down with Chris Klein, head of Guy Carpenter's Sales Operations and Market Relationships in London, to discuss recent developments from meetings in Baden-Baden.
The Baden-Baden Review, brought to you by Guy Carpenter.
Baden-Baden, is it simply another Monte Carlo or is it something different?
It is something different. The discussions at Baden-Baden are at what I would describe as a more tactical level, where you have the buyers meeting with their underwriters who are going to be interested in their line, that particular client, that particular territory, and they will be starting to discuss in more detail capacity requirements, structural requirements, and it's an opportunity for the reinsurers to give an indication of what they're prepared to make available.
Guy Carpenter once again hosted the Reinsurance Symposium in Baden-Baden, and the question being posed was, has the market turned? With the influential panel you moderated, can you summarize their thoughts on the issue of rates?
The overall consensus was that the market has not turned up. There's adequate capacity remaining in the reinsurance market, but that doesn't necessarily mean it's going to be given away. Reinsurers have a choice, particularly with low price-to-book valuations. The reinsurer has the choice of buying back shares at a favourable price. The other thing is that people felt generally that despite losses that we've seen this year, particularly the natural catastrophes, is that the pain, whilst bad, is insufficiently intense to cause a market-wide turn.
Outside of rates, what were the major topics of concern in Baden-Baden this year?
A lot of discussion about low interest rates and what that means for the investment income, the investment returns of insurers and reinsurers. Uncertainty about the effect of the RMS version 11 model changes. Some reinsurance markets applying it in full, others not so, perhaps relying more on their own individual models, and again clients really looking for more time to understand the implications. The Thai flooding is a subject of increasing interest. Great concerns that here is another non-peak but large natural catastrophe loss, and also concerns about the contingent business interruption around those losses with a lot of high-value component suppliers in the affected area, I guess. And finally, the Turkey earthquake, whilst not a big economic or insured loss, another reminder that every day is the start of earthquake season and that Mother Nature can be capricious.
Thank you, Nina. We turn now to the world of captives. For many years, Bermuda has been the leading domicile for captive insurance companies. Since 1987, however, Hawaii has become one of the top captive domiciles in the world and the leading domicile in the Pacific Rim. J.P. Schmidt was insurance commissioner of the state of Hawaii from 2003 to 2010. He worked closely with the NAIC to improve insurance regulation during his tenure, serving on the International Committee and chairing the International Regulatory Cooperation Group. He joins us now from the Hawaii Captive Insurance Council meetings in Maui with an update.
The 2011 HCIC Educational Forum with J.P. Schmidt, brought to you by the Hawaii Captive Insurance Council. Captives are very attractive to risk managers in this market because of the continuing signs of hardening in the market, as well as the opportunity for companies to really take control of their risks. With a captive insurance company, the company, instead of paying out premiums, is able to retain that capital and put it to work. They're able to invest that capital as well as get loan backs, and they're able to really get a handle on their risks and find better ways to take care of them. In addition, captives have some significant tax benefits as well. There are numerous opportunities for development of a captive as risk managers and companies are looking for better and more innovative ways to deal with the risks. Traditionally, captive insurance companies have handled liability risks for their company, but now they're looking at new areas such as covering employee benefits, now that the Federal Department of Labor has given numerous approvals. Also looking at catastrophic risk through securitization and other means. And in addition, there's always a concern about health care risks, and particularly with the federal government Health Care Reform Act. Hawaii is a preferred domicile for captives because they have a stable legal structure. They put the laws into place back in 1986, and the Hawaii Insurance Division has continually updated those laws to keep up with all of the changes in the captive industry. Growth has been very good in captives for the state of Hawaii, as they are now third in the nation based on the number of captives in the domicile. And they are actually fifth largest in the world based on the amount of capital assets that the companies have here in Hawaii, over $9 billion. At the Hawaii Captive Forum, they're dealing with numerous educational sessions on issues that have great importance to companies thinking about setting up a captive, as well as current captive owners. They're considering financial reporting, taxes and federal issues, captive trusts, investments, group and sell captives, how to cover employee benefits with captives, global captive insurance programs, as well as the new horizons for Japanese companies setting up captives. So they're covering quite a variety of sessions. People attending the sessions are looking at serious business here, which is shown by the fact that at previous captive forums, on the last session of the last day, they've had to bring in extra chairs for all of the people interested in the subject matter and learning more about it.
For more on the HCIC conference, simply go to the RIN TV on-demand library. JP will be hosting a new series on world risk and insurance news called Asia Pac in Focus. We hope you'll join us for insights on business in the Pacific Rim. And now we have highlights from a trio of recent interviews conducted by AM Best, including Roger Morris, Chief Communications Officer for the National Insurance Crime Bureau, discussing the use of social media in investigations; Kevin O'Brien, President and CEO of the Inland Marine Underwriters Association; and AM Best's own Anthony Diodato, VP of Property Casualty, discussing insurance reliance on risk models. This is Best Day on RIN TV.
Well, first of all, each company has its own business practice and makes its own business decision on whether or not to use these tools for investigations. I can say that here at NICB, our analysts and investigators use publicly available resources like Facebook, Twitter, LinkedIn, and YouTube on a regular basis as they look into cases, particularly those involving organized criminal rings, which we specialize in. The one thing that we stress is that all of this information is publicly available. People are posting it, and while some of the social media sites have become much more active in allowing members to restrict public viewing of their information, people are still making their own choice. There are many limitations on insurance investigators, and I would stress that here at NICB, we don't try to get information by deceit or pretext. Everything we do is ethical and legal. Frankly, today's SIU or data analyst has to be on top of these things just to keep up with the bad guys.
Inland Marine certainly is more profitable than the broader spectrum of the property casualty lines. In fact, for the last decade, Inland Marine combined ratio, which means expenses and losses, has been at 86% on an average for the last 10 years. Transportation is one of the top lines in inland marine, construction being the other one. Between the two of them, they make up 50% of the inland marine premium. The economy has wreaked havoc on both of those lines, construction and transportation. What CargoNet does is they facilitate the reporting of theft incidents to law enforcement. And by facilitating it's one of the primary things they do. They do some other things too, but by facilitating that information to law enforcement, it makes it much more likely that those goods will be recovered in a timely manner, minimizing the potential claim. The construction and the transportation, however, they hover well above the average inland marine combined ratios. Construction being usually about 5% above the sector in general, and transportation 10 to 15%.
As you know, the industry uses catastrophe models, and we all know for the last year one of the vendors had come up with a version that changed. And companies that are using that are finding a big difference in what numbers previously they were using versus what they're using now. Use the model as a starting point, and then from that starting point, use that information compared to your prior history and what you feel as a management team based on the experience in the book of business, what the risk characteristics are. So we want to see experience and how practical the model is. If there's a big divergence and they could articulate why, because of the construction type or the writing, other characteristics that the model may not be able to capture, that's the type of stuff that an AM Best analytical team wants to hear about to make their decision when they go to a rating committee. And you, Mr. CEO, Chief Risk Officer, Chief Underwriting Officer, you're the ones that know your book of business better than the modeling company, better than AM Best. You know how it's going to perform when these events happen. You tell us how you're managing that risk, and that's how we go about it.
We'd like to thank AM Best for their contribution. If you'd like more information on social media in investigations, inland marine insurance, or insurer reliance on risk models, simply go to the RIN TV on-demand library or visit the AM Best Video Center at ambest.com/video. Well, that's been our report. This has been Natalie Carney reporting from New York. Join us next time for more world risk and insurance news on RIN TV.